Bitcoin breaks 106K. Is 250K next? Here's what's coming. Bitcoin is on the move. And it's not just another pump. We're witnessing something much bigger. A surge driven by institutional demand, mainstream adoption, and hard-coded scarcity. If you're a hodler, this might just be the beginning of something historic. Disclaimer: this content is for informational purposes only and not financial advice. Please do your own research before investing. Let's break it down. Bitcoin breaks through 106,000 after months of sideways action and post-halving consolidation. Bitcoin has finally broken through the $106,000 mark. That puts it within striking distance of its previous all-time high, around $109,000. And market momentum suggests we could soon leave that number in the dust. What's fueling the bullish surge? This isn't just retail hype. There are serious macro forces at play here. ETF inflows. On May 20th alone, US-based Bitcoin ETFs saw over $666 million in net inflows. That's institutional money. Hedge funds, pensions, asset managers flooding into the space. Wall Street. Adoption. Even the old guard is giving in. JP Morgan Chase, whose CEO once called Bitcoin a fraud, is now offering clients access to Bitcoin investments. Whether they like it or not, the banks are following the money. Post-halving supply shock. The recent Bitcoin halving event cut daily BTC emissions in half. With less new supply and more demand, scarcity is pushing prices up, just as it did in previous cycles. Analysts predict big numbers. Many top crypto analysts believe this rally is still in its early stages. Plan B, creator of the stock-to-flow model, suggests a realistic target of $150,000 to $180,000 by the end of 2025. Others go even further, predicting Bitcoin could reach $250,000 or higher, especially if macro uncertainty continues to push capital out of fiat and into hard assets. These predictions aren't just hype. They're based on models that have closely tracked Bitcoin's price movements through previous halving cycles. But don't forget, volatility is still here. In true Bitcoin fashion, this rally hasn't been without chaos. Just hours after touching 106K, BTC pulled back to 103K, and in the process, over $600 million in crypto trades were liquidated. It's a clear reminder that while the long-term trend may be up, short-term volatility is part of the game. So if you're trading with leverage, proceed with caution. If you're hodling, stay the course. What this means for hodlers. For those of us living the hodler's lifestyle, this moment is confirmation, not celebration. We've seen this pattern before. Disbelief, breakout, media frenzy, then parabolic growth. This is why we stack. This is why we wait. And this is why we don't flinch when the market moves sideways for months. Because when Bitcoin runs, it runs fast. So ask yourself, are you ready for what's next? Are your coins secured? Are you thinking long-term? If the answers are yes, then sit tight. The best may still be ahead. Final thoughts. The Bitcoin bull is awake. Institutional money is flooding in. Supply is shrinking. And the world is starting to pay attention. Whether you're new to the game or you've been stacking sats since the last cycle, now is the time to stay focused, stay calm, and most of all, stay hodling. Follow HODLers Lifestyle for weekly updates, Bitcoin deep dives, and motivation to stay on the path to financial freedom. Escape the rat race. Enter the HODLers world.